Moving abroad can be extremely exciting, especially when you're deciding which country you want to relocate to. But the decision involves more than beautiful scenery, inexpensive rent, or inexpensive Wi Fi. There are particular countries that you want to be mindful of, not because they don't have wonderful things to offer, like a beautiful quality of life or inexpensive healthcare, but because they experience high currency fluctuation that can negatively impact you as an expat, and you want to be mindful of this on your move abroad journey. So in this video, we're going to discuss how currency fluctuations impact expats and how you can better prepare so that you're not caught off guard and you have a contingency plan. So there are a few countries globally known for high currency fluctuation. So if these countries are on your relocation list, you want to pay special attention to this video. In Africa, Ghana, the CD is one of the most volatile, often subject to sharp devaluation tied to debt burdens, inflation, reliance on export commodities like cocoa and gold. Nigeria is another country that has seen repeated devaluation, especially with oil price swings and government currency controls. Zimbabwe is another country, extreme instability, hyperinflation historically, and periodic redomination. Egypt is another country, significant devaluation in recent years due to IMF programs and dollar shortages. If we look at Asia, Thailand, generally more stable than Ghana, but still subject to sharp moves during global crises. For example, the 1997 Asian financial crisis. Pakistan is another country, Sri Lanka, and Turkey. Turkey's on the border of Asia and Europe, as you know, but it has one of the most volatile currencies in the recent years because it was hit by very high inflation and unorthodox monetary policy. In Latin America, the particular countries are Argentina, Venezuela, and Brazil. Argentina, as you know, famous for recurring currency crisis and high inflation. Venezuela, as you know, the government has ostensibly had hyperinflation and repeated redomination. Brazil, more stable today, but still sensitive to global commodity cycles. And Eastern Europe, Russia, and Ukraine. But most people are not considering Russia and Ukraine to relocate. But just so you know, Russia experienced heavy fluctuation tied to sanctions, oil prices, and geopolitical shocks. And Ukraine, the war, has driven instability and driven up volatility. So what are currency fluctuations? Currency fluctuation has to do with when you look at your exchange rate, how much your home currency is worth. Particularly, we're talking about the euro and US dollar. What happens is that volatility gets introduced into the currency. So that means there's large and frequent ups and downs in value. And this is driven by inflation, high interest rates, political instability, as well as dependence on commodities such as oil, gold, cocoa, etc. It's not one thing in particular. It's a series. It's a perfect storm that causes this devaluation of currency. Now, with expats relocating, there's positives and negatives to currency fluctuations. We'll discuss the negative first. So for an expat relocating, the cost of living becomes uncertain. Rent, groceries, transportation may swing wildly in local currency terms. Payment and saving issues are presenting. While you may be earning in US dollars or in euros, you may face limits in converting into the local currency when you go to the cambio, what do you call that? The currency exchange businesses. Also, locals may demand payment in stable currencies, especially when it comes to rent. Put a pin in that. We're going to discuss further later on into the video. Well, with economic uncertainty, not knowing exactly how far your dollar or your euro goes, budgeting becomes more challenging when prices are unstable or unpredictable, as well as savings can lose value if you hold your money in local banks, which is why it's prudent to not put all your eggs in one basket and to maintain international banks. So as we discuss the risk and the disadvantages, of course, one of the main motivators of moving abroad happens to be the strong home currency advantage. The euro and the dollar are still strong currencies. And so this allows Europeans to have more purchasing power than locals. There's also affordable short-term rentals, long-term rentals, co-working spaces, domestic travels. So foreigners really make out well when they relocate because of the strong currency of their home country, and they're able to purchase more, live more comfortably than they would in their home country, which is a driving force for many people leaving the US. Now, one of the strong advantages of being an expat is that your plan B can be to relocate back to the United States, although many don't like to think about that as an option. But if there's instability, volatility, and perhaps unrest that is coupled with currency fluctuations that impact how far your dollar or euro goes, there's some comfort in knowing, at least psychologically, that you could eventually return to the US. Now, in terms of how the currency fluctuations impact your daily life, now, this is the major thing, especially when it comes to housing, that you want to pay a special attention to. Now, landlords have the option to switch to USD rents, reducing the volatility and giving them an advantage. With food and essentials, inflation hits local markets hardest, imported goods may spike, but you could survive off the local goods. As I mentioned earlier, banking, some countries restrict foreign transfers or withdrawal, particularly Nigeria and Argentina, and contracts. Hard to lock in long-term rates when currency is shifting rapidly. So as we mentioned, food and essentials, you really have no control over the cost of exports. You can survive on imports. You can survive on the local food. Banking, again, the restrictions on foreign transfers or withdrawals will impact how much you can take out from the ATM or from the bank. So that is something to consider, as well as contracts. Depending on the type of contract you are signing on to, this can impact you. So what does it mean when landlords switch to USD rents? So what landlords do is that landlords often peg rents to euros and dollars to protect themselves. And so this erases the whole notion of cheap living advantages for foreigners. So landlords can ask for rent in actual US dollars or euros instead of the local currency. So this keeps the real value of their income stable, even if inflation wipes out local currency. So yes, rents can feel as high as American rents because you're paying in US dollars or euros, not in the local devalued currency. So for example, in Buenos Aires, many apartments are advertised for $600 to $1,200 per month, which of course is low for a New Yorker or a Californian, but compared to the local salaries, it's 10 times what the average Argentinian makes. So if you look at what an Argentinian makes in pesos, this is crushing. They can't compete with foreigners earning in dollars. So for you, it means a huge cost of living advantage shrinks because housing is one of the biggest expenses. So another example, more concrete example, is without USD pricing, if a rent is, let's say, 200,000 Argentinian pesos last year, that might have been around 800 US dollars. But after devaluation, it's only $400. So you benefit. Now, if the lease agreement is in USD prices and the lease actually demands US dollars, rent is $800. So you have to pay the landlord in US dollars, cash or transfer, and only in US dollars. Even if the peso collapses, you still pay the same dollars. So you don't get a discount. So the bottom line is paying rent in US dollars or euros locks you into a global price rather than a local. And in tourist or expat heavy cities, rent ends up being closer to what Americans or Europeans would pay, not what locals pay. So while groceries or transport and eating out may even be inexpensive, housing costs may be nearly the same as in the US or Europe. So when you're signing a lease agreement, you want to pay particular attention to the lease agreement if you're paying the local currency or if they are requiring payment in USD. Because many foreigners, unbeknownst to them, are often asked to pay what is considered the international price, which may be close to the rents in American cities because landlords peg to hard currency. So yes, the rent you're asked to pay is often the American equivalent rate for the city's expat tourist market, not the lower local price. So why is this allowed? Well, ostensibly they're private contract. Most countries, landlords can choose the currency or payment in the rental agreement. So if you sign a lease that says 800 USD a month, you've agreed to it. Also, it's an inflation protection for the landlord. So they know that they have an unstable economy and that the local currency can lose value. So quickly, the landlord sees USD, euro as a way to protect their income. This also demands and driven. Because foreigners can pay in dollars or euros, landlords in popular areas often set prices that way and it becomes the market norm. So where it gets regulated. Now, some governments are trying to regulate it to make it stop. They do try to stop it. Particularly Argentina has passed laws requiring leases to be in pesos, but in practice, landlords still find ways to demand USD with informal agreements. In Turkey in 2018, Turkey banned some real estate contracts in foreign currency, but many landlords found loopholes by pegging rent to USD equivalents. So enforcement is often weak, and landlords know foreigners don't want the hassle of fighting in court. So the bottom line is that it feels like it should be illegal, and in some places technically it is, but enforcement is patchy. So in practice, landlords in unstable economies nearly always find a way to demand what is called hard currency rent, or US dollars or euros. So, as you can see, living abroad involves so many moving parts, and there's so many blind spots for expats that cost them tens of thousands of dollars. It's not just about finding a beautiful apartment or cheap meals. It's about making sure you're legally protected and you have a system that allows you to do due diligence. Knowing your rights can mean the difference between paying inflated foreigner prices as well as securing a fair legal lease. The same goes for visas, taxes, healthcare access, and work permits. So that is why I created the Legally Abroad course. It's an in-depth course that walks you through all the things that you need to know and prepare before you move abroad. How to select the right country for you and your family, how to select health insurance, what to do if you have a pre-existing health condition, US and foreign taxation. Also, remaining compliant with the US, as well as how to protect your money, your assets, your rights, and future while living overseas. I have poured all of my legal expertise into this course to guide you on one of the biggest steps that you and your family can make. And you do not want to guess this. You want to take your time, and no better person to walk you through what you need to know than me, myself, as an attorney. I've made this journey several times, and I poured all of my legal knowledge and my mishaps into the course so that you can avoid costly mistakes. So if you want the confidence of knowing you're not just living abroad, but living abroad legally and thriving and have have security, then this course is for you. Let me know if you have any questions regarding this video, and don't forget to like and subscribe, and I will see you next time. Bye-bye.